All that glitters, is it? I'm Biko Konstantinos, and today we're going to talk about gold stocks. By gold stocks, we mean companies that mine and produce gold. My goal is to support your trading and investing through quality and up-to-date market analysis. Please like this video, subscribe to my channel, and hit that notification button so you see all my new content. Ever since the post-COVID rally, gold stocks have been languishing and have really underperformed, especially relative to the gold price, which remains relatively quite strong. One way to get a good idea of how the gold stocks are going in general is looking at the New York Stock Exchange Gold Bugs Index, which is otherwise known as the HUI, H-U-I. So the HUI index combines currently approximately 23 gold mining and producing stocks that are unhedged. And that means they sell their gold into the current spot gold price. So these are companies that are more leveraged to the actual gold price, which means as the gold price goes up, they're able to sell their gold for higher prices. Okay, so if we look at the actual HUI chart, we can see that after COVID, gold stocks had a sharp fall, but they really quickly retraced, and then they surged up a lot higher than their previous levels, and that coincided with the gold price surging above 2,000 US. But as you can see, since then, the gold price has come down, but also the gold bugs index, which is the HUI, came down significantly to pre-COVID levels, to the same level that it was pre-COVID. It rose a bit when the gold price recently came up to about 1,900, but has since fallen and is once again trading at that pre-COVID level around about this 250, which has seen some good support so far. Now looking at the gold price, as you can see, we had a sharp drop after COVID and then that massive rally to above 2,000, and then it came back down to quite significantly to around about that 1,700 US level. Had a bit of a rise, came right back down to this 1,700 level, and has recently just risen back up to above 1,800. Now, one thing you can see here, we had a very sharp retracement down or sell down to that same support level under 1,700, but a very quick retracement. So that's one of the most strongest things that I can see with the chart, is there was a massive sell down, but it came back up nearly just as quickly. And that's very strong in my opinion. So whether the price was manipulated down or there was just a capitulation where there was some fear among some investors and they offloaded heaps of their gold investment, either way, there was massive support under that 1,700 level, and they shot the price back up to 1,800, and now just yesterday's Friday, the 27th of August, Friday's trading session ended above 1,800, so that's starting to look strong for the gold price. So the difficulty for investors in gold stocks recently has been that the gold price has been relatively strong. Many gold producing companies have been making good profits. They've got good cash flow. A lot of them have been increasing their profits lately. But the difficulty has been that the share price of many gold stocks has not been strong. So it's been relatively weak, especially compared to that strong gold price and some of the increase in revenue and profitability that those gold stocks have been enjoying lately. Now, silver often follows gold in regards to the share price, and we'll have a look at how it's going. So as you can see, After the spike to around about that $30 mark, it's been trading really between $30 and $23 or $22. And you can just see this sideways trading recently dropped back down to this support at 23 and is currently trading close to $24. So that support level is very strong for silver. Now, I would assume if the gold price continues to increase from that $1,800 level, stays above 1,800 US and continues to rise, then most likely silver would follow. And the really important thing for silver is, can it crack or can it rise above this strong resistance level that they have at $30 mark? If it can break through then you could see a very quick surge in silver. As you can see after COVID, once silver gets going, it can really move quickly. And this is sort of like a near vertical rise, which is it's a very big possibility that can happen in the silver market. It tends to move in much higher percentages than gold when it really gets going. Okay, if we look at the index for Australian gold stocks, which is known with the code XGD, what we can see is the stocks were actually doing better before COVID. And the reason for that is the Australian dollar gold was actually very strong back then. And that's because of the difference between the US and the Australian dollar. So when the US was a lot stronger and the Australian dollar went right down to about 60 cents compared to the US dollar, the Australian gold price was very strong. So that has an effect on how Australian gold mining and producing stocks are faring in regards to their profitability. But as you can see, COVID, there was a bit of a downturn. Post-COVID, the price of, or the average price of Australian gold stocks went very, very strong. But since then, they've actually dropped very strongly. Came up to the pre-COVID levels here, when that was in line with that recent rise in the gold price, but have since fallen and are now actually trading below the pre-COVID levels in general. So relatively weak as well, you can see, the Australian gold stocks. And that's looking at the stronger gold miners in the Australian market. So probably the top 200 of the ASX, so the top 200 stocks, all the gold actual miners in that index are averaged as part of this, this index here. So it gives you a bit of a look to see really they are not trading so strongly. So what that means to me is if there's going to be a return to some investor support for gold stocks, then they're probably around a pretty cheap level right at this moment. Like they're not trading way too high, especially compared to the profitability. A number of Australian gold miners, gold mining companies have released their yearly returns, and a lot of them are generating a lot of income based on their gold sales. So really, the levels where they're at could be very good buy, depending if they're going to rise from here. A couple of reasons why gold stocks may not be rising recently. One is investors may have in their mind that the gold price in general is going to go lower. So because there might be a belief in the market that gold won't return back up to say 2,000 US, or gold will be sold down to back down to 1,700 or lower, maybe there's a bit of sentiment in the market that thinks the gold price won't remain strong, and for that reason, maybe they don't or aren't interested in buying up many gold stocks. Another reason might be that gold as a safe haven might be put aside for the moment because cryptos possibly have taken over a bit of that safe haven type status. Cryptos have certainly come back strongly after their fall a couple of months ago. So Bitcoin, Ethereum, Cardano, Solana, some of those major cryptos are really starting to surge again. And possibly that's creating a lot of that investor excitement, momentum. So whenever something goes up strong, it always attracts new investors. Perhaps that is a reason why investors aren't really that excited about gold stocks at the moment. I'm not sure. Those are a couple of potential reasons. Now, one of the best ways to get into the gold stock market is via ETFs, and that stands for exchange traded funds. And gold ETFs typically will track or average out a number of gold stocks. So you've got a gold basket of some of the biggest gold stocks in the world, and that can really reduce your risk. So you don't have the risk of owning a single, say, gold mining company. And the risk of that is something could go wrong in the mine, in the company. There could be a lot of things, sovereign risk. There could be a disaster in the mine itself. So there's a number of risks involved in mining. But if you hold an ETF, because it includes a whole basket of gold stocks, your risk is reduced significantly. So you may not get as high a return as an absolutely amazing stock, but it's a great way to have some of that gold stock in your investment portfolio. So have some of that coverage. So if gold stocks do well, by having an ETF such as some of these top ETFs here, then you can profit if gold stocks in general. So if the sector does well, so there's a number of factors that can help. Strong gold price definitely helps because profitability remains strong. But also if there's a return of investment of favor towards that sector, things like safe haven, like we were talking before, if gold returns as a strong safe haven type play in investors' minds, then there could be a strong return to gold stocks. So investing in one of these ETFs could be a good strategy. Now, some of these are global ETFs. So what that means is you'd have to have an account, a stockbroking account that allows you to trade global stocks or global ETFs to be able to buy some of these. In Australia, the two quality gold stock ETFs are GDX, which is VanEck Gold Miners, and MNRS, which stands for Beta Global Gold ETF Units. So these two gold ETFs can be purchased via an Australian stockbroker. So just a standard stockbroker like CommSec or any of the other major Australian stockbrokers that allow you to trade the ASX, so the Australian Stock Exchange. These are two ETFs in gold stocks that you could purchase. Now, another way you could profit from a strong gold price or a return to the gold sector is via individual gold mining stocks. So companies that mine for gold, that produce gold, and there's a number of ways that you can look at these. The first thing is to do some research. There's many different searches you can do for gold companies within any country. So if you're wanting to look for stocks within your own country, do a search and then start to research those companies. A couple of things you might want to be looking for. You want to be looking for a good management team. It can make a massive difference when it comes to a mining company is a good management team. How you might know that, you can do a bit of research, have a bit of a look at what other people are saying. Also, if the management team are investing in their own company, that's usually a good sign that they have, say, money in the game. So that's one certainly thing to look for. The stock price is another one. You don't want to see a stock price that's just falling, because that usually would signify that there's some issues with that company. A lot of people, when they're starting out, they look for those ones and they think, man, this is cheap. But my experience has shown you don't want to buy something that is falling. You really want to buy something that is being relatively strong. Yes, it might have fallen along with the general gold stock market. So because, you know, there's weakness in general, nearly every gold mining company has fallen. But you want to look for the ones that have fallen probably the least, because that signifies there's still quite a lot of strength there. So that's another important thing to look for. And then when you look at the reports, you want to see profitability. You want to see growth or the potential for strong growth in the near future. So look through the income statements, look to see how the company's going in general. One thing to be really wary of in gold companies is too much debt or being an explorer. So explorer means you're not actually mining anything, you're not receiving any income. So those explorers need to get money some way, and they usually will issue new shares to try and make more money. And if they're constantly issuing too many shares to get money to keep drilling and exploring for gold, then that can dilute the share price and it can make it difficult to make money. Yes, there are explorers that can do well, but with explorers, it's a lot more risky. Maybe 1 or 2 out of 10 really do excellently. So you'd have to do, I think, a lot more research regarding explorers and have a strong feeling with one. But just know there's a lot more risk, and it's a very big process to take a company from finding gold to actually start mining and producing that gold. It's quite a difficult process and it needs a lot of money. So that's just one thing to be aware of. Now we're just going to have a look at 2 Australian gold stocks that meet that criteria of being relatively strong against the other gold mining stocks in the Australian market. So both are West African miners. So both have mines, both of these companies have mines in West Africa. So West Africa at the moment is very profitable. Expenses are quite low, and the nature of the gold reserves are very profitable for mining if you can find a quality gold deposit. So the first company we're going to look at is West African Resources. So if we have a look at the chart for West African Resources, they have 1 mine and it's in Burkina Faso. They're looking at producing 200,000 to 300,000 ounces of gold per year at a very quality expense, so quite a low expense. So their profitability between what they can sell the gold for and what they can produce the gold for is quite a large profit. So that makes West African Resources being able to generate a lot of profit quite quickly because they've only recently started producing, and they're able to reduce their debt. So the debt that they use to build the mine, they're able to reduce that very significantly, and they probably will be able to reduce the entire debt probably by the end of 2021, so the end of this year. And then from then, basically any money that they're making is just net return, and they'll be able to build a cash balance, which will then help them whether or not they want to make an acquisition or things like that. So if we look at West African Resources, there's a resistance around this 115 to 120 level. So $1.15, $1.20. Recent trading has been up. So you can see this, trend line going up. We can call this basically maybe a bit of an ascending triangle. And what that means is usually we'll see a breakout either upwards, or we could see a breakout downwards. But I guess the probability is leaning towards an upwards breakout based on the chart and based on the assumption that the gold price will remain strong. Even if the gold price does not continue to roar up, West African Resources is still going to be making a very good return. So it sort of minimizes the risk. I guess the risk with both West African mining companies could be, because their mines are in West Africa, things are done a little bit differently there. So you might have a bit of sovereign risk because the mines are situated in West Africa. But that certainly hasn't stopped many of the major gold companies across the world doing a lot of investment in West Africa, and recently as well. So it's certainly a hotspot because of the amazing gold that they have there, and because the expense to mine is relatively quite cheap as well. So West African Resources is a stock to consider based on risk versus reward. It certainly could do well, especially over the coming 12 months, 24 months. They're looking at, they've mentioned in their reports, they're looking to either pay a dividend or do a share buyback. And both of those would be extremely positive for investors. Here is the price chart of Perseus Mining Limited. So Perseus has 3 mines in West Africa, 1 mine in Ghana, and 2 mines in Côte d'Ivoire. Now Perseus is producing more gold than West African Resources, currently above 300 ounces a year, and they're actually working up towards being a 500,000 ounce per year producer of gold. So having 3 mines gives Perseus a very strong ounce production. It also, I guess, maybe minimizes risk a little bit, having 3 mines. So if there was an issue at one of the mines, you have some more going. So possibly minimizes a bit of risk that way too. Now looking at the share price, as you can see, there's a resistance around about 160, 170 level. The price spiked up to that level, came back down to the low $1, around about 110. Spikes back up to the 160 mark, close to 170. Actually hit 170. Has recently just come back down a little bit. However, as you can see, still very close to that all-time high level. So really, compared to the gold stock market in general, like the gold stocks and how they've been faring, both Perseus and Perseus and West African Resources have been doing very strongly in comparison to the general gold stocks. So because of that, I would class them as 2 of the stronger Australian gold mining stocks, especially when you look at the weakness towards the sector in general. So what that can usually mean is if there's a return interest, or if investors start to really become a bit more excited about gold stocks, then usually the strongest stocks can rise the quickest, because they're the ones that are usually in the best financial positions, or have the best growth, the best profitability, things like that. And so they usually generate a lot of interest. especially when the markets in general is doing well. So Perseus, as you can see, once it breaks through this resistance, could continue doing very strongly, is very profitable. The price that they're selling the gold and the expenses that it takes to produce that gold, there's a very strong margin. So they're going to be making a lot of money over the coming years. So is it a great time to buy gold stocks? Well, looking at the gold price again, I really like the looks of this sharp sell down and then quick retracement. I was very happy to see the Friday's close above 1800. So that suggests a bit of strength there. And what I'd like to see is the price remain above 1800 US and continue on. If it did, that would increase my confidence that it could be a great opportunity to be buying gold stocks. If there was a retracement back down to 1700 levels, then that's when I would have some major caution, because we wouldn't want to see a breakdown below that 1700 level and see gold prices continue downwards. Then gold stocks could do badly then. But looking at the current market, I think, in my opinion, it's a bit more favored towards gold stocks being a good present buying condition, especially considering gold could continue above. And if you look at one of my old videos regarding a potential cup and handle pattern, when you look at the long-term gold price, which I'm just going to try and bring up here, you can see in the long term, basically that 1900 level, that $2,000 US level is extremely important. So what can happen is we can have a cup here, a handle, and this pattern, a cup and handle pattern, can really generate some massive returns and some massive appreciation in the gold price. It's a long-term pattern, however, so we don't know how long it might take. But if gold starts to appreciate and break through this 2000 level US, then it could be really exciting time for gold stocks. They could really start to generate massive returns as excitement comes to the sector. Now, as you've seen probably recently in the crypto sector, when there's a lot of excitement and a lot of price moves, things can move massively. Now, that could happen in the gold sector, especially if gold can surge above this 2000 US market. So, if you believe that it might, then it certainly could be an opportunity to purchase gold stocks currently while the prices are a bit depressed. I'm Biko Konstantinos. Thanks so much for watching. I really appreciate it.